The great news is we are still seeing significant demand for economic industrial decarbonization. Hydrogen has seen its challenges, but we do still see long-term vision of leaders in spaces like refining, petrochemicals, steel, biogas, who want to drive carbon out of their value chains, but only if certain parameters are met, right? So what are those parameters and where in the world are we seeing this demand? First of all, most importantly, it must be economic. Economic industrial decarbonization still has big demand that we're showing with contracts with leading global companies today. Well, let's unpack that a bit. What does economic really mean? It means in a space like steel, you can't change the cost of steel. Carbon needs to come out, but we can't sacrifice margin to go and to get it. And this has led many leaders to realize new assets can be expensive, long lead times, and be difficult to permit and bring online. We need to decarbonize existing industrial assets first. Blast furnaces in steel, for instance. Steel blast furnaces account for 70% of steel production today. We're not going to turn those off. And if we're going to take carbon out of one of the most carbon emitting industries in the world, in steel, we've got to find a way to decarbonize blast furnaces, which is where Utility Global comes in. We've proven now that we can drive carbon out of steel, get to a green steel product without changing the cost of steel because of our cost structure and the economics that we deliver. Hydrogen's a part of that answer, taking waste gases into our reactor, giving them back hydrogen to use in the blast furnace, while at the same time giving them up to a 75% pure CO2 stream. That is the kind of combination that leads to carbon being taken out of the value chain without changing the cost of steel. If I talk about refining and chemicals for a second, similar value prop, but even stronger. We can take off gases from a refinery or chemical complex, giving them back hydrogen at gray hydrogen cost, right? While also giving them a 98% pure CO2 stream. At 98% pure CO2, you don't need a carbon capture plant on the back end. So you need to have an economic value proposition that makes sense. We're seeing the biggest demand in Europe and in Asia, specifically Japan, Korea, India. These are countries that have long-term visions to decarbonize if it can be done economically. And in Europe, Western Europe, where there are mandates and there are carbon trading schemes that are driving momentum faster. We do have first projects now announced showing this. So ArcelorMittal, who's an investor in our company and a board member, we announced the first project in Brazil. And then additionally, Moss Energy, who's the largest dairy biogas developer in the United States. We have a first project in California taking biogas to hydrogen with them as well. Global leaders in steel, we're deep into project assessments. We have 40 projects in customer assessment today with roughly 7 that are at final stages of being signed. We have a total of 5 projects that are signed or in final signing. So a strong commercial pipeline that we're very fortunate to have with customers that see the vision of how we can enable decarbonization that's economic, leveraging hydrogen to a very efficient process. So at Utility, we are proud to be proven technology past the demonstration phase. And we learned quite a bit in that demonstration phase. So from 2022 to 2025, we demonstrated our H2 Gen technology successfully over 7,000 hours in a series of demonstrations, starting with 4,000 hours in our Houston facility, driving the demanding use cases simulated in industrials, biogas, steel, refinery, and chemical off-gas streams, showing 4,000 hours of runtime, 1,200 hour plus continuous runs, and that we can provide the hydrogen and CO2 efficiencies that we need to deliver the value in decarbonizing. But the major step came after that. In 2023, 2024, we deployed our H2 Gen reactor in a world-class steel facility in Canada, directly integrated and taking blast furnace gas from that steel plant, converting that through our reactor into hydrogen and high concentration CO2. I ran for 3,000 hours in one of the most demanding industrial environments that you will find. Steel is the hardest place to start, which we were happy to take on. And we showed and proved that H2 Gen works integrated into a real industrial asset. So we showed both, of course, that the hydrogen production and CO2 concentrations were what we wanted them to be. But most importantly, we showed that when the asset has an issue, when blast furnace gas, our feed gas, stops showing up, which happened 19 times, sometimes planned, sometimes unplanned without notice, are you able to react to that? Do you react to the asset, or does the asset react to you? You have to be able to react to the asset, or else big industrial owners can't afford to have you on site. And we showed time and time again in that demonstration, We react to the asset 19 times. We showed we can go into a hot standby mode within 15 minutes of gas not showing up, when other technologies take between 24 and 72 hours to slowly ramp down. That is not acceptable to industrial owners. And we can go into hot standby in 15 minutes, stay there as long as they need, come back up in 15 to 30 minutes. That proved that we can react, we can integrate successfully into industrial assets. So those learnings were all captured, and now we are continuing that learning process through our Frontier reactor right here in our home city of Houston, Texas, that came online in the fourth quarter of 2025. That reactor is our 24/7 living laboratory where we continue to build in learnings from the prior demonstrations and all of our customer engagements to date. So from all those learnings, we are fully prepared to show how we can integrate into assets, how we can design plants that fit customer needs, how we can adapt our plants to the varying use cases and needs of refining steel, chemicals, and biogas, and be a truly flexible and adaptive decarbonization technology that delivers for our plant customers. So as we scale globally, the foundation we build upon is the commercial pipeline and meeting the customers where they are. What does that mean? Our customers are all unique. They're in the same industries potentially, but their plants, their assets, their priorities, their economics at the company level and particularly at the asset level are all very unique and require tailoring to make sure we're maximizing the value H2Gen and utility can deliver to that customer, to that plant. And then we thoughtfully plan with our customers a scale-up plan for H2Gen that starts with smaller plants at the first locations and gets to very large plants over time. So what does that mean? First plants can be as small as 3 to 5 tons a day of hydrogen production, but the large plants, which is the prize, can be 150, 250, 500 tons a day of hydrogen, all leveraging the same cells, the same reactors in a very compact footprint. So we plan that out with our customers, and that commercial foundation of where are the plants, where are the regions in that customer's footprint, where H2Gen provides the best economics and the best value proposition versus competing technologies. With that commercial foundation and those plants in place and in process, as contracts are signed, which we're very proud to have our first 2 contracts announced and 4 more on the cusp of being signed, we then are in planning to scale the rest of the value chain. So it's critical, led by commercial, that we're then scaling manufacturing. We manufacture 1 plant per year worth of our technology in our Houston facility today. That's going to deliver on our first wave. CERAWeek is our announced third-party manufacturing partner, a global leader in ceramics, which our technology is a ceramic-based tech. And so between our Houston facility and CERAWeek, we plan that modular scale-up of manufacturing to meet the customer pipeline. Supply chain, we have a very robust supply chain for our small plants that are coming online over the next 2 to 3 years. And we have our large-scale supply chain partners in planning now. Partnerships are key and critical. Engineering, procurement, and construction, EPC partnerships we have in place today, and several others in planning. Other technologies that attach to ours, carbon capture technology for one, partnerships are core to our ability to scale our plant concepts. So every element of our supply chain, our manufacturing, our engineering, and our plant production is in place today for our first wave of plants, is in planning with clear global leading partners as we scale up, all planned around this foundation of a customer pipeline that's aligned with our customers to maximize the value they can achieve over a plant program over time. I'm very proud of the history that I have leading companies through commercialization. I'm very proud of our team, who also have significant experience across our executive team and many of our leaders at the VP and lower ranks in driving companies through commercialization. And there's a lot of learnings that happen with that. I think some of the ones at the executive level that we are very focused on, that we've learned from prior decarbonization technologies, there's a series of foundations you must have in place to succeed. I think the first really is having a very strong value proposition that is resilient across market cycles. So what does that mean for us? That means technology that doesn't require subsidy at scale. And at utility, that's exactly what we have. At scale, we can decarbonize industries like steel without changing the cost of steel, without the need for significant plant subsidies. Secondarily, you need a customer base and pipeline that's diverse, that's resilient, right? Different industries come and go. They rise and then they retract. We are very diversified across steel, refining, petrochemicals, biogas. We have customers that are committed to a long-term vision of decarbonization, if the economics can fulfill what they need to maintain margin. So that pipeline is in place for us, which we're quite proud of. On the back of that, you need to have investors who have that clear buy-in to the value proposition to support the company across cycles. And we are very fortunate to have our partners, a $6 billion asset under management private equity firm, who's very focused on supporting companies with economic decarbonization as their core. They've been a primary investor and majority owner of our company for several years, continue to support us closely. And in partnership with we've built a investor base around the company that we are quite proud of. Aramco Ventures, Samsung Ventures, ArcelorMittal, who's a leader in steel, and OPG, to name four, who've been with the company through our Series B and Series C rounds. And we're, again, quite proud to have APG, one of the largest pension funds in the world based in Europe, to have joined our investor group, being a co-lead with on our Series D, which we just closed for $100 million last month in February 2026. So we're quite excited about that foundation that we have beneath us. And the fourth foundation that I'll point to, which is as important, is that the company is run and built to be efficient and to drive progress while being good stewards of cash and capital, right? Many technology companies you've seen over the last 5 years in particular have struggled in getting too far ahead with their burn rates, with how they're spending and growing ahead of commercial, ahead of revenue. This company has 60 people today in March of 2026. And the company, given what it's accomplished, it's incredible with as lean of a staff and a burn rate as it has had. We will maintain that focus and discipline. We are going to grow smartly to scale our supply chains, our manufacturing, our technology development, and our commercial support to deliver on the pipeline of projects that we're now contracting, but all tied to revenue, all tied to contracts, and all tied to our path to cash break even. So with those four foundations in place, this company is set up to really thrive and to scale in a way that is led by commercial, that's led by value proposition, with investors who believe in the company, and with an approach to growth that ensures that we maintain a strong balance sheet throughout that exciting journey.